Welcome to today's webinar. My name is Akanksha and I would be the moderator today. Today's webinar is in collaboration with Nick Walden from the Hackett Group, and he'll be speaking on planning your procure-to-pay automation project for success. To start, a few housekeeping tips for you all. At any point of time, you may send us your questions in the Q&A box and they'll be addressed towards the end of the webinar. Introducing Zycus. Zycus is a leading global provider of complete source-to-pay suite of procurement performance solutions. A comprehensive product portfolio includes application for both the strategic and the operational aspects of procurement. That's again been recognized as a leader in Gartner's Magic Quadrant for Strategic Sourcing Application Suites in 2017. A few words about our today's speaker. Nick is a senior advisor in the Hackett Group's procurement and P2P advisory program, where he works continuously with senior executives of the world's leading companies to provide top performance insights, research, and networking. With a broad background in consulting and industry, he has spent 15 years working with senior executives to address and overcome challenges to transform procurement and finance organizations. Without any more time, I would now pass it to Nick to start the webinar.
Hi, thank you. This is Nick Walden speaking. So we have a number of people attending the webcast today. So thank you for joining. As you know, the topic for today is planning your P2P transformation for success. Feel free to connect with me on LinkedIn or follow me on Twitter, where I regularly share insights on purchasing P2P and future trends. My connection information is at the bottom of the screen there. So a quick reminder on who the Hackett Group is. We are an intellectual property-based strategic consultancy. We are the world's #1 benchmarking and best practices firm, and over the years we've conducted more than 13,000 studies with major corporations and government agencies. What we do for benchmarking, best practice membership programs, consulting services in areas like enterprise performance management, finance transformation, working capital, and shared services. Our unique approach to achieving sustainable and world-class performance requires world-class organizations to achieve top quartile performance in both effectiveness and efficiency measures. So you see on the diagram with some specific P2P measures. On the one side, achieving high levels of effectiveness in areas like use of channel strategy, compliance to preferred suppliers, and quality metrics like first-pass match rates and on-time payment for suppliers. And side for efficiency, this means performing well, very well, in measures like unit cost, productivity, and automation. So as of today's webcast with the topic planning your P2P transformation project for success, the webcast has been marketed to organizations in the Middle East, Europe, and India. So I've picked content and plan to speak to you about topics that are more relevant if you're at the early or middle stage of your transformation journey. And in P2P, you may be facing specific challenges with a complicated or perhaps an unclear requisitioning and a process. The tools that you use may be difficult to use today, or requisitioners, budget holders may find it difficult to find or order the product or services they're looking for. There may even be compliance issues or low adoption or use of your current process and tools. You're wanting to replace paper and manual activities to be more electronic, say deploying new electronic invoicing technologies. But with that you're facing today, it's likely you want to build capability, create more value in P2P from activities like automation, re-engineering, adding new skills, or even just changing how your team is set up. Spend the next 40 minutes or so talking you through some of the essentials efforts that you need to know to transform your purchase to pay, specific Hackett insights on P2P priorities in 2017. I'll cover transformation best practices, looking at the technology landscape, buying, purchasing, and finance policy. So that things like the delegation of authority. I'll look at buy pay channels and touch on automating accounts payables and electronic invoicing. If any topics are new to you, don't worry. I'll explain each one of the best practices as we go through. So we'll shift gears a little. We'll talk about key performance metrics, and best to lead and manage change with your suppliers and internal stakeholders. That can be a challenge, especially in P2P, and it's key in terms of driving the benefits that you're looking for. I'll try to answer some questions as we move along. Otherwise, we'll be sure to save some time at the end. So first, with P2P best practice essentials, Procure-to-pay is simply the activities of requisition, order, receive, and pay. And best practice P2P is designed to achieve specific outcomes. Really, we want to protect against risk with segregation of duties. We want to make sure we have approved budget checks and that you know your suppliers through this verification steps. We want to approve and buy from preferred sources of supply through purchase orders and preferred supplier lists. And we approve and pay only valid supplier invoices. And we want to enable these activities in an efficient and productive way. So on the same page, let me first walk through the P process in more detail. Starting first with requisitioning, point on the screen there in the bottom left. Basically raising a requisition, say for a product or a service, ideally an electronic purchasing system, and requisitioning methods like shopping carts, free text requisitions, automated replenishment orders, or even more simple manual steps. Then the key check is around budget approval. In this manner, an electronic requisition is loaded for a finance approval and listing of available budget. More advanced systems may provide real-time information and warnings on how much budget is left. The third key best practice step is around testing the requested goods services come from an approved source. So in a more automated environment, buyers only need to touch a small number of requisitions. We'll have business rules automatically check requisitions to see, for example, whether requisition includes an approved item, it's coming from an approved contract, and it's with an approved supplier. Now at Hackett, we call these business rules the trusted source criteria. Or less automated situation, these checks are probably performed by a buyer and allows them an opportunity to play more than a basic administrative role, right? So they can review that requisition, they can assure and check transaction quality, and help shape demand. So a buyer can ask a requisitioner in the business, what is it that you need to use that supplier for that item? In the class situation, when you already have 10 other suppliers set up in the system for that item. Step number 4 refers to master data elements. Previous steps are relying on data being set up in the system for things like for items, catalog items, contracts, and supplier information. So appropriate people responsible for setting up and maintaining these master data elements, following a consistent process with approvals, following different naming conventions, conducting the required checks, and accurate will be absolutely key. Step number 5 in terms of current order. So once that requisition is approved, it's come to an order and ideally distributed electronically out to a supplier. So if you're using paper here, that definitely slows the process. By fax, then that's now very old technology. Point 6, in terms of receiving, and is issuing an invoice to our organization. You can do that in a number of different ways, right? They may flip the order to an invoice using PO flip, or probably, where allowed, they may use an electronic invoice approach, or even paper invoice, which can then be captured or manually entered into the system. Here at the same time, a goods service receipt may be requested electronically to match against the corresponding PO. The second step, processing the invoice. Here, based basically looking for a valid invoice, which is automatically matched against a PO and or receipt. Any deviations followed up and addressed with the supplier or internally. It's basically want to get the invoice ready, approved for payment. Methods here can include two-way invoice matching methods like evaluate receipt settlement. Organizations are self-issuing the invoice on behalf of that supplier, or we're setting up recurring invoice payments with a recurring payment schedule. Now, the in terms of payment involves the payment request and actually paying the supplier. Here again, we're preferably doing it by electronic means. As an exception, this may also be by check, or where the order was actually settled up front with a purchasing or even a credit card. In terms of some insights around benefits, reasons why you may want to transform purchasing or your payables, research shows the benefits can be significant. So if we consider on the left-hand side situation where we're using guided buying approaches, we're deploying logs, we have a team talking to suppliers, negotiating contracts, and price ahead of time. Some benefits that we see significant improvements in processing productivity, as well as improving compliance by routing spend through contracts that we've already negotiated and put in place, and this delivers savings in external spend. And you see on screen there a 10% reduction in spend with suppliers. That can quickly be a big number, and that can be much bigger than the productivity or efficiency savings that you can achieve by streamlining and automating your process there. And so, right-hand side, looking at payment automation, say we're moving from more of a based process to be more electronic. We want to be more automated and more self-service, and also improve productivity. So, a team on average are processing maybe 7,000 invoices per head per annum. In the numbers, the research that we do, this improves your productivity by nearly 2.5x, up to say about 17,000 invoices a year. Benefits are delivered as well in terms of improved quality, with match rates and payment on time performance. Suppliers on time is becoming increasingly important, especially in Europe. There's been new legislation, new regulations here in the UK around reporting of payment on time performance, but it also helps organizations achieve broader targets around, say, corporate sustainability and treating smaller suppliers fairly. Now to considering transformation priorities and projects in 2017. So late last year, Hackett ran our P2P key issue study, and here we surveyed a few hundred leaders in P2P for large and international organizations. The study provides great insights into what projects and objectives are being prioritized. And you can see the chart with the top three bars being emphasized. They focus on enhancing stakeholder satisfaction, more value from P2P, and supporting sourcing savings. Priorities like agility, flexibility, compliance, and risk are also there, but they're just a bit further down. Key takeaways or two key important messages from this chart. It really helps us confirm the broad benefits potential you can realize from transforming P2P in quality as well as service terms, but the different types of projects that are being planned. So we see organizations not only automating with technology and tools, but also out of their projects selecting technology and redesigning processes in customer and service-orientated ways. We want our tools and systems and our processes to be more admin-like. We want them to be intuitive. We want to be able to quickly and easily onboard suppliers. We want for our teams to be able to easily use them with minimal training for acquisitioners and budget holders. We want to be able to quickly deploy them across our businesses. Now, we may be optimizing our existing investments with projects to migrate and onboard suppliers from paper or PDF invoices to follow through electronic invoicing methods, targeting pricing quality, to address payment on time performance, looking at PO to invoice match rates as one other example. Third topic is around setting up shared services or looking at outsourcing or streamlining our processes. As well as doing these, we're also adding new roles, redefining responsibilities to deliver new abilities and additional value. So examples here, we see organizations putting in place buying desks just to perform PO assurance roles, but they're also delivering further value from tactical buying, 3 bids and a buy type activities. We saw organizations putting in place analytics to help them optimize processes, to see which suppliers can be onboarded to be more electronic, so to provide visibility into spend, and to clients to provide further savings opportunities. We're asking our purchasing teams to manage requisition demand, and our payables teams not only to process invoices, but we want them to influence supplier behaviors as well as internal stakeholder behaviors, right? We want our suppliers to use self-assist tools, and we want them to send invoices more electronically. So a second key insight, just to jump forward from the same Hackett P2P key issue study, it also provides a range of useful insights on the ecosystem of available technology solutions in 2017. So we automate technology range from core ERP systems like SAP and Oracle to standalone or best-of-breed solutions offering scanning or payables, or comprehensive management suites like Zycus and others. And to note that the survey data here covers organizations that have operations in Americas, across Europe, Middle East, as well as Asia Pacific regions. Now, if it was only showing results for a single region like Middle East or Asia perhaps, then we might expect to see technology adoption further to the left and perhaps earlier in the adoption phase. But your screen in the green, I've highlighted a number of core automation tools for payables, for eProcurement, for contracts, and eInvoicing. And the results from the survey show these tools to be broadly deployed and nearly fully adopted. In the mean there, eInvoicing, that's one tool set that jumps out as needing further work to onboard suppliers, perhaps to expand to new businesses, or to drive the change, especially for countries with recent or upcoming regulation changes. So to quickly explain some terminologies here, when I say e-payables, really I'm talking about the activities of receiving, matching, and paying invoices, as well as the follow-up activities to handle any discrepancies, say with workflows and approvals. The eProcurement, these are catalog management, they are returns to be raised with shopping carts and free text, also approving the purchase order and distributing them out to suppliers. And contract lifecycle tools, here we're looking for a tool to create and store contracts in some sort of repository. We want to maintain standard templates and clauses. Maybe we have alerts for milestones against renewal anniversaries or spend limits. Of course, more advanced tools will have perhaps redlining as part of a negotiation workflow. In terms of eInvoicing, here we're talking about the upload or transmission of invoices by suppliers in an electronic format for processing by the payable system. So often one of the key advantages from the eInvoicing system is the upfront validation as well as specific compliance with the relevant tax rules. We also see from the a trend in terms of the rapid growth of cloud systems over on-premise. Some years, cloud deployments have grown, and it's estimated as 50% of new deployments are actually now being cloud-based. You can see from the chart there, from the highballs, maybe between a quarter and a half of organizations today already operate with cloud-based technology in these core tool areas. So very interesting insights on the technology landscape there. Now to top around guided buying. So this is one key best practice in terms of thinking about transform purchasing. Basic electronic purchasing systems are enabling requisitioners to request products and services in lots of different ways. Especially on the direct side, requests may be automated based on inventory coming from planning systems. So suppliers may manage inventory on your behalf based on contracts. On the indirect side, other procurement or other requisition methods involve procurement-assisted activities where buyers involved and they're validating the source of supply or conducting a sourcing or an auction event. There's the self-service or the guided buying situation. So here the objective is to make it as easy as possible for requisitioners in the business to select that supplier with pre-negotiated and approved pricing, having to engage with your professional buying organization in every transaction. So we call this our buying framework, and this approach is very useful for the broad requisitioning community, or you can call them the casual buyer of indirect goods and services. At most companies, there may be many thousands of these casual buyers, and they specialize in buying. They may be buying once a week. They may be buying, once or twice a month or so on. In terms of enable guided buying, so we're looking at deploying technology and automation, as well as and that the new tools in our process to help requisitioners manage their own buying needs. And we want to transparently and seamlessly direct them to the right supplier so that we can leverage maximum savings based on the contracts that we've put in place. So we're asking guide buyers, requisitors to raise shopping carts. They long use the electronic marketplace tools on the top left there, say accessing the company marketplace. And they're logged in, they're searching and finding the products or services they need. They're then creating a shopping cart item, picking from catalogs, and then refer to these business rules, these automated business rules. Is basically conducting a right supplier assessment against trusted source criteria. So in more detail, the system here is the system is basically checking the shopping cart for three things, right? It's checking whether it includes an approved item from that approved supplier catalog, that's a valid price, whether it includes an approved system contract, and that is within tolerance, and it's whether it's an approved preferred supplier with the threshold. Now, in an automated environment, this will assure check quality, shape demand. Again, if it's more manual, then a buyer will need to carry out these types of activities. Really, the difference you see at the bottom of the screen there by whether or not it's a self-managed buy or a buyer-assisted process, right? So when it's doing that right supplier and assessment, and the system decides actually it's not a catalog item, or we don't have a valid contract, or it's not a preferred supplier, and that requisitioner is that good or service, then the system will automatically route that requisition for support by the buyer and follow up to carry on the follow-up actions there. So it's a key topic when you're thinking about your transformation in purchasing and finance and P2P relates to purchasing and finance policy. So these documents that basically provide the rules and controls that allow us to best manage budgets, risk, as well as create a smooth process. So, for example, delegation of authority or your DOA. This document will do the limits of authority for different positions across the organization, and establish the maximum amount that this different role can approve. So, for example, in your DOA, you may say the CFO can approve up to $10,000 or $10 million US, where a cost center owner may only have a responsibility to approve $50,000. Sourcing policy is another key document, and this document usually covers selecting, conduct business with suppliers, setting obligations and expectations for suppliers and business stakeholders. It'll also explain when a PO must be raised, when procurement or your sourcing teams must be involved, or when you can just run with a 3 bids and a buy type approach. Now, in any of these situations, if your policy isn't clear, if it hasn't fully communicated, it's not fully understood, or not forced, then it's likely looking at this topic as part of your transformation project can provide some good benefits to your organization. In green, results from our survey around top reasons why organizations need to update and streamline their policy, right? They're looking to improve that understanding and compliance piece in terms of updating the policy to make it easier and clearer to understand how and when to buy. Perhaps they're looking to reach the retrospective PO or the after the PO creation point. And this basically refers to ordering goods or services, but then afterwards you're coming along and raising the PO in the system. So this in effect bypasses the upfront controls that you put in place with the PO in the first place. And a third reason is around looking to reduce the use of unapproved suppliers, right? So they might not be set up in advance in the system or agreed with purchasing and their sourcing strategies and so on. So if you recognize any of these situations, you think you might have an issue, then you could do with some spring cleaning here. Step you're thinking about what you need to change is to think what you understand what's causing the issues or compliance issues. Whether or not it is, for example, the technology that's difficult, whether or not it's your process that's difficult, or whether or not your policy is actually too tight, right, and doesn't allow for certain valid exceptions, like you've got urgent requests, or there's one-off buying requests that just need to be catered for in some way. Potential is around buy pay channels. Okay, if you're thinking what are buy pay channels, this is basically the way that we define the channels. We allow requisitioners or users to pay or use the P2P process. We want it to be the most convenient as well as compliant way, but also managing risk without costly over control. And the key here is to achieve the objective that we're eliminating inefficient processes and we're optimizing our remaining options. So a channel strategy needs to do 3 things, right? It needs to define the way that we source, buy, and pay, and to integrate our strategic sourcing aspects, parts of the process, with our tactical and operational processes. So there's 4 key components to see that on the screen. We want to reduce the variations and how to buy and pay, and the rules, switching off and disabling other methods. If I consider some of the ways that you allow, say, ordering IT or hardware across an organization, or even MRO and spare parts, you might think, well, how many different ways do we enable buying across the organization today? Is it 5? Is it 10? Is it 20 or so on? And really we're saying, look, let's review ways that we buy those commodities today. Let's think about what are the optimal preferred ways, what's the efficient way, what's the best way that manages risk, and gets visibility of that spend, and then look to write that into our policy and deactivate and switch off those other ways that people are buying those commodities and goods across the organization. And that's the key, really. We're looking to manage our spend by managing or match our process to the technology and the tools that we've deployed. Another example, if we want to take, say, temporary or contingent labor, as a best practice perspective, real service, we want to make sure it's picked up catalog, that the PO is raised automatically because it's off catalog, that the order is distributed electronically to the supplier, that then when times come in, the timesheets are inputted. That's in effect our service receipt. And then especially because it's temporary labor, we know that from a best practice point of view, actually, because timesheets and we've got great data there, what we're going to self-bill. We're going to issue the invoice off the back of that timesheet on an ER basis and pay that supplier electronically. We didn't have this description, or we haven't gone through that process of thinking about, what is the preferred, what's the most efficient, what's the best way to manage risk and control spend. We'll typically find that, people make their own approaches based on what they know, what they find easier, or what they're more comfortable and confident with. And in a situation where you have a lot of variety, perhaps also reduced satisfaction with the service, delays in terms of approvals, or late payment to suppliers. Talk a little bit more about buy-pay channels, give some specific examples, and how it relates to P2P transformation. So one challenge is, if you're introducing or you're updating your electronic procurement system, is often around purchase orders. The way that we use PO to match against a goods or service receipt, which is to a price or quantity on an invoice. To achieve this three-way matching, purchase order receipt against the invoice, in practice, it requires consistent quality and a timely process. Now, we know it can be difficult to achieve those. And any deficiency, again, means supplier payment is delayed or unpaid. As a trend, we see an increasing push for the use of POs, and you see some of the numbers there on the screen, with about 50% of actions following this three-way matching process. You may then hear some organizations say, we have a rule where a PO must be raised for all spend. And I think as a perspective, in the early stages of your transformation, when young people used to following the rules, or you want to tighten up clients to do the right thing, then raising purchase orders and carrying out other required actions to get valid approvals, I think that really makes sense. But from a practice point of view, when you get a bit further along, through matching, because it's so tightly controlled and a heavy process, it doesn't always make sense consider risk and control for all types of spend. So at the time, you might think to employ other payment control methods. And you see some of those on the screen, right? Cards, non-PO, contract, purchase order, two-way match, assumed receipt, RS, invoice pay on match, three-way match. So to give examples, it's with the invoice only. So here we've got an invoice coming in. We've got a purchase order. Commonly, it's used for situations involving like insurance or utilities, transportation, or other spends like telecoms and legal. In this case, the invoice will come in. You'll route it for approval and coding, but there won't be any PO. And for top performing organizations or those that have worked on this, we see about 18% on a transaction basis could be pushed to this method. Now, using this invoice-only method for our spend types, or more than 18% of your spend running through this channel, then you might need to think about tightening up control and increasing the use of POs. Now, the point of research is that approximately a quarter or 25% of transactions can be covered by two-way methods: recurring invoice, PO invoice, or PO and receipt-only methods. So let me talk about these methods as well and the use cases there. So for a recurring invoice, here we're basically talking about raising a one-time requisition that goes to the AP team and set that up in the system. And it's for a recurring payment for a specific supplier over an extended period. Sorts of examples I'm thinking about here are for a property or rental. For another two-way example like PO invoice, so this is especially useful where you've got in service for the requisition, in the purchasing tool, the supplier catalog, you've got an approval via workflow, and then an item is off catalog. It means it fits certain criteria, right? Like having a stable price. So the PO is automatically issued to the supplier based on that approved requisition, and is triggered when that electronic invoice comes in and matches to the PO, right? So we've got no receipt in that situation. In this next situation, where we've got a PO and receipt, we've actually got no invoice. He's saying you can perhaps make the payment based on the purchase order. Purchase order controls the price, and it has got its item description, but a receipt that controls the quantity aspects. The amount that gets paid is determined by multiplying the price by in the PO by the quantity in the receipt, and the system will automatically create the matching invoice for the payment processing. And this is the sort of situation that I was talking about earlier with timesheets and temporary contingent labor. Let's skip forward to thinking about how we might transform and automate payables. Automating payables is new. Involves still many very familiar technologies. The activities themselves lend pretty well to good automation. The challenge and the effort really comes with the approaches that we take to manage the complexity and the variety from different invoicing methods. The effort and the time that we put into onboarding suppliers to use these more electronic and automated means and methods, and the training and the communications that we give to requisitioners, to procurement, and to budget holders, and getting them to follow a standard process that we put in place. A few success factors or a few keys here can be communicating the invoice requirements and expectations. So this could be, say, procurement's involved early supplier selection process, and then suppliers know that to do business with us, your invoices need to meet certain requirements and perhaps follow self-billing or EDI or invoicing or whatnot, or maybe we're communicating and making this requirements information available supplier portal, and then the payables team, the payables clerks can follow up with suppliers. So in terms of advanced practices here, really electronic invoice is still the preferred invoice receiving method, and may be e-invoicing or electronic invoicing. It may be EDI, it may be PO flip. Other methods can be scanning or scan and capture, and provide some of the benefits that are possible in terms of automated payables. But you won't get the full benefit of electronic. And then there's usually some still manual steps retained, and of course quality won't be as strong as a full electronic process due to mistakes or machine misreads. And some key automation steps. Other benefits include automating invoice approval, matching to the PO and the receipt, use of workflow for approvals, especially for non-PO. In terms of transformation, minimizing or eliminating petty cash and check payments can be a good opportunity, as well as deploying supplier self-service technologies. And what I mean here is allowing suppliers to log into a web portal to allow them, say, to enter a PO number to get transaction level information on their invoice, know where it is in the approval or the payment stage, and this helps to reduce the volume of supplier inquiries coming in by phone or email, and gives the added benefits of helping drive quality in the overall process. Now, thinking about automating in payables, there's some planned and upcoming changes in electronic invoicing. So let's quickly review some of the highlights here. So our trend, e-invoicing is definitely increasing rapidly. And one of the reasons for this is that the tax authorities actually prefer invoicing as a method as it reduces improper handling regarding taxes. Also, from an organization perspective, can achieve significant benefits to payables in terms of processing efficiency and quality. And if I look across the landscape, there's two models in use here, right? There's the post-audit approach, and there's the clearance method. So post-audit, which is widely used across Europe, basically requires that the invoice authenticity is proven by the process controls and technology, whereas the clearing method, and this has been rapidly adopted by a number of Latin American countries. It's well known, just Brazil and Mexico these days. Here, government is mandating the use of an official invoicing system, and this provides the government with real-time financial information. It's a key part of systems and logistics, documentations, and so on. But the European Union, e-invoicing is regulated by the EU directive. In Europe, it's focused around addressing longer payment terms, looking at late payment practices, and especially the treatment of small, medium-sized suppliers being fairly disadvantaged by larger organisations. Here in the UK, recently, or planning to introduce this year, specific regulation around payment terms, reporting and performance. Now, in the East, as we see governments looking to diversify their economies, their revenue streams, perhaps away from oil, this indicated the introduction of new taxes, mandating the use of e-invoicing in private sector. Now, in terms of Saudi Arabia, the model here is in transition. E-invoicing is being mandated in the private sector from 2017, so from this year onwards. The EU is also expected to move from a no-VAT model to use taxes and e-invoicing, and also India, starting the tax situation, the federal and state taxes, to a GT-based model, which is expected also to happen in 2017, and that'll make the e-invoicing situation more viable there. Now, there's basically a lot that you can do in terms of planning, designing your transformation, and using performance metrics to help you measure and track success can help in many different ways. So at the start of your project, they help to illustrate the design and the vision, as well as, of course, get your business case approved, right? We're going to deliver this amount of benefit. We expect it to cost this much. And metrics during rollout phases, they'll help to track the progress and adoption. At later stages, they can help to target further enhancements or drive continuous improvement activities in the right way. So there's lots of different things that you can measure from a cost perspective, quality perspective, service perspective, or even working capital. But really want to measure, track elements that are going to positively influence the thing you're trying to change. So a few examples: if you are transforming purchasing, then metrics you might want to think about are spend with approved suppliers, after the fact or retrospective POs, or on electronic catalogs. Targeting or transforming accounts payables, then electronic invoicing is the metric you want to look at. Then you want to focus around first-pass match rates for PO-backed invoices, and on-time payments will give you some good indications of the quality of your process. Topic I want to cover relates to change. And I've got a case study example here. So this is a project that we worked on, and we looked to transform Procure-to-pay, design and vision for new technology, for a new process, deploying new capabilities like data buying and analytics. And like the example, your project roadmap can benefit from an agile approach, with each phase being a series of sprints with a defined start and a finish point. Major project phases, you can include design, go-to-market, configure and testing technology. You want to find new capabilities. You know, if you're putting in place a guided buying approach, if you're updating, streamlining your policy, if you're doing by channels, or you're automating payables. There's the rollout. You certainly first pilot, perhaps to a business segment or a select group of users, and then afterwards, when you're successful, you want to think, to scale up to include more users in different parts of the organization. But to use pilots the right way. Pilots help to maintain momentum with your change. So being successful allows you to demonstrate the benefits, and it allows you to continue to change. And during the rollout process, you want to track progress with stakeholder feedback. You want to track the progress in key metrics like adoption or utilization. Then, of course, adjust and fine-tune as you need to. So management and communication are critical to delivering your change and project success. In pay, this is especially important as we need to change with people buying in new ways. We want to achieve compliance to policy. We want to increase the use of our tools and process by suppliers and internal stakeholders. And this means that we need to integrate change management at each stage of our project plan. Don't think about it as something just to do when you're finished, or you think you're finished, or only when something has gone wrong. So as an example, I've picked up some activities that you can do at different stages of your project. So when you're starting out, doing a short current state piece of work, you can think about identifying important stakeholders, help you progress the decision making. You'll probably also want to make a baseline of current performance. What are the volumes, what's the quality, what's the errors, what's the pain points, how satisfied are people, what are the good and the bad points. When you're further along and you're thinking about the future state or the vision, here activities can include referencing Hackett best practice, with that vision, preparing a project storyboard for how things will be different in the future. Success factor can also be doing a change impact assessment. Okay, so you want to do a bit of a fit gap, identify the biggest areas of change, which stakeholder groups are going to be impacted the most. Is it going to be suppliers? Is it going to be requisitioners and budget holders? And then basically we want to use that insight to share a matching plan for how we're going to guide a change in the different change activities that we need, like training, supplier announcements, if we need to update websites, any media campaigns, migrate any services, and so on. Now, whether on change management and what organizations are good at, what are the key best practices that you're going to be most successful with in terms of driving change with transformation projects. So the blue bars show the practices that have been more adopted by top performers, those that are more successful in achieving all or more of their desired change, while the green bars refer to the level of the practices that have been adopted by everyone else. And if you look at the chart, you can see that the big organizations report they're pretty good at communication aspects, and people and problem solving. They avoid rollouts during busy periods like month-end ends. What we also see is that there's opportunities to do more, right? To learn lessons, to get better. We tailor the benefits of our projects, of our change, to specific audiences. So we message things the right way or the best way. That will out change in incremental steps. So we want to do more or go faster, but we do that in a phased way rather than a big bang, right? And learning is that we can monitor the adoption of change through KPIs, through identifying additional training and communication needs, and fine-tuning as we go along. So some interesting insights there. Now, before I finish up, so this is the last slide on change. If you have any questions for me, now's the right time to be raising them in the Q&A box in the panel right there. But really thinking about some of the success factors that we picked up from the case study. Remembering communication is all about winning over hearts and minds. Inevitably, it's difficult. We don't do enough. I find it difficult. It takes time, it takes energy. I had a point about matching communications to your organization's culture. But when I presented this point to an organization earlier this week, they said to me, in terms of change, our transformation, we want to introduce new practices. We want to introduce new policies. We want to use POs and strict invoice approvals that we're doing before. And for our culture, this is going to be new. So we may need to take more of a boot approach to drive through that change. We're implementing some of the new capabilities and concepts, like I've spoken about today, in terms of buying, policy, buy pay channels, supplier onboarding. New capabilities, they take more time to develop, more time to train and deploy. So the success factor here is ensure that we have enough time in our plans to do that properly. And then, of course, when we are doing the training, we don't just train people how to use the tools, we also train on the process. We want them to understand the why, only the how. And this helps build buy-in and people understand, what's the business benefit or why they need to follow that process in the first way. And then to that, we help use things like buy pay channels to help manage the change. When you're transforming P2P, you might hear people complain about how difficult it is or how long it takes to raise a purchase order, or if we want to restrict them more tightly to only use approved suppliers. So buy pay channels help us do this. We're basically thinking, well, we can tailor that preferred approach to how we enable and communicate to commissioners, helps manage this pushback, right? Also, another example there will be a situation where inevitably is the need for some one-off type of good or service. So a real example, someone mentioned to me a couple of weeks ago, and they tightened up on using suppliers and content in the catalogs. They had someone come to them, raise a free text requisition, say, I need orange balloons, right? But in the catalog, you've only got a supplier for blue balloons. Some of that demand is real, so you just need to think about how are we going to handle those exceptional, those one-off situations and leave, the policy broad enough or a method to handle that, whether or not you push that through expenses or you push that through a P card and get that to your requisitioner support or your buying desk as one option. And as a last point, just to remember about deploying roles. We also want to train and develop existing roles and people in our team so that we make sure we get value from everyone. So it takes me to the end of the presentation and the slides. So to thank everyone for their time and open it up to anybody if they have any follow-on questions. Hi.
Hi, Neil. We have only 4 minutes to go. We can address a few questions. One has asked, why do organizations find change difficult?
Why organizations find change difficult? I think it's because change is treated as a separate activity. If we're focused on the technology aspects, or we're focused around mapping processes, or I'm a project manager, sometimes we don't have the skills. We don't have specific roles. We don't realize that effective communications can provide. For example, if someone was to ask me, P automation, payables automation, why are we still talking so much about this in 2017? It's because, for many organizations, still so much of the process is still paper-based, right? Our invoicing for top performers, they may have been able to convert or 70% of their invoice volume that way, but for other organizations who might still account for 50 or 60%, right? So I found it difficult because we haven't invested the time, effort, and energy into it, right? We've found it difficult, and we've that. That change is difficult, realizing that there are some best practices in how we approach it, realizing that we need to think about it in a different way and give it enough effort. Like, for example, if we want to try a change in the invoicing, having a supplier onboarding team and having people that are communicating those messages to suppliers, they might have a different skill set than what we have with our normal accounts payable clerks. Maybe the key skill there is that they need to be comfortable spending a lot of time on the phone or communicating with suppliers via email. So maybe the types of people that we want to do those jobs are actually in our customer services or our marketing team rather than our payables team. So I think, as a feedback point, doing change management well means thinking about tools that we need to do that well and making sure that the people that we ask to do those change roles, they have that skill, they have that confidence, and we put the necessary level of effort into it. There might be time for one more question.
Yes. Here's one more question. Can you clarify your point that there is more to transformation than technology?
Sure. This is a really key point. If I look in the marketplace right now, there's a lot of hype, a lot of talk about digital transformation. I mean by that. And, new tools, new automation, new technology will absolutely play a key role in that. But we need to think about it holistically. We need to think about it broader. Technology is one key part, but when you're thinking about transforming P2P, you also want to think about some of those other concepts I took you through today, right? In terms of guided buying, our process, how we communicate, how we redesign and enable people to use the tools, about policy and the governance framework. What is the threshold for people to reuse a PO, or what commodities do we use it for, or when does the sourcing team need to be involved? That's another key part. Talking about change earlier, and I was talking about making sure we have the right skills on the team. But the people, the skills they need, are also a key part of it in getting full value. Another key part, of course, is our operating model. So at Hackett we have a model called digital service delivery model, and driving transformation. Technology and tools is one part. There's also skills and people, there's organization and governance, there's organization design, service partnering, and so on. So there's 5 or 6 key aspects to consider there that are key to having best success in your transformation.
Thank you, Nick. I think we can end our session now. I thank all our attendees and our speaker, Nick. Have a nice day.